If I said, I'm going to punch you in the face, would you rather have the company buy 200,000 of Bitcoin a year and sell 10,000 of Bitcoin a year? Or buy no Bitcoin a year, sell no Bitcoin a year? They're not Bitcoin maximalists. They're really just Twitter trolls that are in the business of posting viral content. If you want to grow Bitcoin, what you want to do is attract $10 trillion from the credit markets and then buy Bitcoin with it. The people all around the world want a bank account that pays them 8% in francs. Yeah, what are they getting now? Nothing. I think that when we get past those deals and we come out the back end, I think we'll see a nice rotation of capital back into Bitcoin. We'll recover.
Hello, Cointelegraph is here live at BTC Prague. My name is Kieran and I'm joined by Strategy Executive Chairman Michael Saylor. Right now, obviously, in terms of the market itself, Bitcoin is in a pretty bearish state from a price point of view. I mean, from your point, what still really excites you right now around Bitcoin, and I guess what upsets you about Bitcoin?
I've been in the community, in the business about 6 years. There have been 5 brutal drawdowns. So about once every year, there's a drawdown, some worse than others, but it's not uncommon. So I don't get disillusioned by the fact that it's volatile and we have pullbacks. It's really to be expected. What's exciting this year is you see Bitcoin has never been stronger. Like the Bitcoin identity as the world's digital capital network, the dominant digital monetary network of the world. I think that's clear. Bitcoin dominance has been growing. If you look at Bitcoin's capital or market cap compared to the market cap of all crypto assets, not including stablecoins, it probably fell to 40% in 2021. And it has been marching up toward about 68 to 70% over 5 years. So Bitcoin itself is alive and healthy. It's never been more embraced. Accounting treatments, tax treatments, banking support, institutional support is greater than ever. So that's the first thing that's exciting. The second thing that's exciting is the formation of the digital credit market. Digital credit was non-existent 12 months ago. And it has gone from nothing to more than $11 billion as an asset class. So something that's growing $1 billion a month or more is an interesting thing. And so one of the killer apps of Bitcoin is digital credit in the form of STRC and SATA. Digital credit's it's the most liquid preferred stocks in the world. Our STRC has become the biggest preferred stock in the world. It's not even a year old. And they're trading more intensely than any other preferred stock in the world. So this has completely revitalized the preferred stock asset class, and we've created a new asset class for digital credit. There's 25,000 dividend-bearing stocks. There's one that pays dividends twice a month. There's one that pays dividends every day. So these are very innovative products in the history of the capital markets. And they're bringing billions of dollars of capital into the Bitcoin ecosystem. So that's number 2, very interesting. And then number 3, when we solve the problem of digital credit, we crack the code on digital money or stable coins backed by Bitcoin that pay yield. And so what you see right now is innovators are starting to work on yield coins in the crypto economy. The 2 most famous are Saturn and Apex. And Saturn has created maybe the first Bitcoin-backed stablecoin. Now, a lot of people, they dreamed about this, but no one could go directly from raw Bitcoin to a token pegged to the dollar. That you can't strip a 40 vol asset to a 0 vol asset in one step. What we found is that if we take 2 steps, if we actually go from 40 vol to 5 vol, which is sort of where digital credit is, you can go from 5 vol to 0 vol. What does that mean? That means the market is open to create digital money products that have 0 volatility pegged to the euro, the dollar, the yen, the Swiss franc, the Great British pound, that pay you 8% yield, maybe tax deferred 8% yield. So, does the crypto market want a stable coin that pays 8% yield? By the way, do people all around the world want a bank account that pays them 8% in francs? Yeah. What are they getting now? Nothing. Nothing. Do people want 8%? They want bank accounts in Japan to pay 8% in yen, or 8% in euros in Germany, or 8% in London in pounds, or 8% in dollars in New York? Yeah. What are they getting right now? The money markets pay 3.5%, after tax 2%. So these things are anywhere from 2 to 4 times better. So, what am I excited about? I'm excited about the creation of digital money that can be used as a medium of exchange, a store of value, a unit of account. But it's not the Austrian economist definition of money. They would say Bitcoin is money or gold is money, but it's the conventional TradFi Keynesian definition of money, which is the dollars in your bank account with stable NAV and zero volatility to a fiat currency that pay a yield. That's a money market. So there's $300 trillion of credit. There's 30, 40, 50 trillion dollars in these money markets. They're all getting almost nothing. We can pay 2, 3, 4x as much. And so what do I see? I see Bitcoin as the digital transformation of capital. I see STRC as the digital transformation of credit. And I see these yield coins or other types of funds, like companies like Saturn are working on, is the digital transformation of money markets or digital money, and that's a multi-trillion-dollar opportunity. And so it couldn't be clearer to me that this is going to be revolutionary for the banking business, the money management business, for equity investments, for credit markets, for capital markets in general. And ultimately, if you want to grow Bitcoin, what you want to do is attract $10 trillion from the credit markets and then buy Bitcoin with it. And the way that you're going to do that is with digital credit and digital money type instruments.
So is there anything right now that frustrates you about Bitcoin and where it is right now?
No, I actually think Bitcoin is one. I think that Bitcoin is one economically, technically, ethically, and is being globally embraced. The only thing that's frustrating to me maybe is that it's not always perceived by mainstream TradFi investors. They don't understand it yet. Mainstream media doesn't understand it. And then there's just a lot of dysfunctional, squabbling back and forth on X or Twitter between various crypto and Bitcoin believers arguing over what I think are second and third order issues. And I think that, we'd be better off in the community if we just focused upon growing the industry by a factor of 100, because generally all of the arguments in the Bitcoin community are between people that 99% agree with each other, that pick the last 1%, and then they fight over some third order issue that really won't matter to either of them in a decade.
What do you think of the whole Bitcoin community arguing around quantum computing now and the risks that potentially brings to Bitcoin too?
Yeah, I think that's an example of what happens when you've won. The reason we're talking about quantum computers is because there's nothing else that threatens Bitcoin. Okay, so everything that people talked about, well, there's political risk, the government will ban it, or no one will want to buy it, or companies will never use it, or the accounting is wrong, or the tax is bad, or maybe it'll fail, or maybe it's misengineered, or the block sizes are too small, the block sizes are too big, or it doesn't have enough smart contract functionality, right? The amount of FUD, is off the hook, and every one of those it uses too much energy. He uses computers. The Chinese will take over it. The Chinese make too much of it. The Chinese banned it. They don't make enough of it. Right? There's like 20 types of FUD. They all kind of failed. So after there's nothing to worry about, we invented an imaginary problem to worry about. Imagine a computer that no one's ever built, that it's not obvious we can build. Let's imagine that perhaps we make a scientific breakthrough and we manage to create a quantum computer. And let's imagine that it cracks our current cryptography. And let's imagine that no one reacts or addresses it or upgrades. Then let's imagine bad things happening. It's a hypothetical problem that people imagine so that they can generate engagement on X. The only reason it gets traction is A, there are no real problems, and B, we're in a bear market. And so normally the Bitcoin community, the crypto community at large, it's like hundreds of millions of people all they're all fans of the same team. And the price is like the scoreboard. And when the price is high, everybody's happy. And the price is low, it's like all their blood sugars crash. And it's like they lost yesterday and everybody's in a bad mood. And so in the middle of a bear market, people are in a bad mood. They want to fight about something.
Are we in the middle of a bear market or are we towards the end? Like, where do you see us being right now with Bitcoin and the price?
I think that, it's a the summer is difficult because it's the AI summer where you've got $500 billion of capital getting sucked into AI deals from Anthropic, OpenAI, SpaceX, Google, etc. And so that's creating a temporary market location. I think that when we get past those deals and we come out the back end, I think we'll see a nice rotation of capital back into Bitcoin. We'll recover. And I would think we'll recover by the end of the year. Right now, we're just kind of in the middle of a unpleasant drawdown.
New highs by the end of this year?
I think we could. I think we should definitely see a recovery by the end of the year. I don't know why I don't know if we'll get the new high within 6 months, but I would think over the next 12 months, we'll make a new high.
Now, you've been accumulating Bitcoin for 6 years now with strategy. Is there anything looking back over those 6 years that you would have done differently?
If I knew then what I know now, I probably would have gotten to digital credit sooner. We did about 14 or 15 different capital markets transactions and credit deals. We did a senior secured loan. We did an asset-backed loan. We did about 8 convertible bonds. We did various types of equity, deals. Then we did 3 perpetual preferreds, Strike, Strife, Stride, and then we finally discovered Stretch, STRC. If I could do it again, I would just fast forward to STRC and I would skip everything else. I say that the perfect digital treasury company or Bitcoin treasury company is you've just got a pile of equity capital. If you've got $1 billion of equity, you buy $1 billion of Bitcoin, you have a common stock, MSTR, and then you have a preferred stock, which is like a monthly variable credit spread or variable dividend rate credit instrument like STRC or SATA, SATA. And you don't really need anything more than that, right? Because the credit instrument creates amplification for the equity. So it creates BTC yield or amplifies the Bitcoin yield for the equity in the same way that preferred stock on a bank balance sheet amplifies the dividend yield of the common stock. So the very simple structure is the common stock shareholders want more Bitcoin per share. The credit investors want over collateralization and a dividend. The capital in the middle of the balance sheet, right, collateralizes the credit. The capital gain and the capital appreciation creates the gains they use for the credit dividend. And the equity investors get the value from the credit business. They get all the upside. And so I would say we have a more complicated capital structure today. We have 6 bonds and we have 5 preferred credit instruments. So there's 11 things, but we had to do each of them in order to get to the point where we now understand the best one. STRC trades 50 times as liquid as, the other credit instruments, which are really good. And they trade better than the bonds. And so I really think the epiphany after 5 years of searching was digital credit is the killer app for a publicly traded Bitcoin treasury company.
You mentioned complicated structure before as well. And there's a lot of the strong Bitcoin maxis were a little bit divided recently over the sale of 32 Bitcoin with strategy too. I mean, for yourself, not long after bought then over $100 million worth of Bitcoin. What's the line there with, I guess, when there is obligations where there might have to be a sale of 320 Bitcoin or, 1,000 Bitcoin? Where does that line kind of stop?
I think the key point here is the company is in the business of selling digital credit. The credit is backed by capital. Bitcoin is capital. And to the extent that the credit is compelling, then the equity shareholders create a spread and they get the benefit. It's a very simple business in that regard. You could build this business with real estate. You could build a business with gold. You could build a business with equity. But let's just take real estate. If you went to a bank and you said, I want to borrow money to buy some real estate, but I'm not willing to ever sell the real estate or pledge it to you, but just give me the money. And they said, well, how are you going to pay me back? I said, well, I'll just sell equity, but I won't sell the real estate. Well, the bank wouldn't give you the loan. And if you go to any bank, you said, I want to borrow money for a house, but I'm not going to actually sign the mortgage. I'm not going to pledge the house. The bank won't give you the loan, right? And so you're not going to be able to sell credit unless the people that are buying the credit believe you're going to pay the dividend. The only way to pay the dividend is either to sell the Bitcoin or to sell equity or a derivative of the Bitcoin. If you unilaterally say you won't sell the Bitcoin, the credit rating agencies think, well, that's an impaired asset. Since they won't sell it, I'll mark it to zero, and then that means you can't get a good credit rating. So you can't really create good credit if you unilaterally impair the asset. And then if you go to the equity capital markets and you said, well, we've got a good business selling credit, and they're like, well, but you said that you're not going to use the Bitcoin to back the credit. How are you going to sell any? Well, the equity capital markets wouldn't believe in the credit business. If the credit fails, the equity won't work. And so the first order issue is if you're not willing to use the capital to back the credit, then the business isn't going to be able to sell credit, and therefore you don't have a digital credit business. But the second order effect is a short seller would say, well, it looks like you have to sell equity to pay the dividend then, so I'm going to short the equity because you have to sell it. Well, and I'm going to short it down until you trade at a discount to the asset value of the Bitcoin. And if you unilaterally tell them that's okay, you'll keep selling even though the equity is undervalued. If you went to the market and said, I will sell the equity and never defend it. Like if I said, I'm going to punch you in the face and your kids, and and unless you defend yourself, you're like, well, I'll never defend myself. At some point, you invite, I'm not saying I would do it, but I'm saying criminals and malefactors, evil people will attack you if you don't defend yourself. So if you're a short seller and you're a malefactor and you want to attack the company, if the company won't defend itself, then not only, it's worse than just, it's like, I have $1 billion of Bitcoin, but I'm not going to defend it. You can have it if you come and break into my house and steal it. I'll leave the door open. And then you tweet that. You're not just going to have one criminal. You're going to have every criminal in the country visit you, right? Yeah. You're going to attract malefactors. So a public company that's unwilling to defend its equity is going to attract short sellers, and then you would have everybody shorting the stock. Would you invest in such a company that's unwilling to defend itself? By the way, I'm running a restaurant. I give away all the food for free. People can steal from me. Would you like to be my investor? And this is common sense, right? You're not going to invest in a company that will not defend its property, right? Will not defend itself. And you're not going to buy the credit if the company won't pay the dividend. You're not going to believe the company can pay the dividend if they only use equity, if the company won't defend the equity now, will you? So if the company's policy is that we won't sell the Bitcoin, then the credit won't have value and the equity won't have value. And if those two don't have value, then instead of the company buying $64 billion of Bitcoin, which is what we've done, the company raises no money and buys no Bitcoin. And so in this case, would you rather have the company buy 200,000 of Bitcoin a year and sell 10,000 of Bitcoin a year, or buy no Bitcoin a year, sell no Bitcoin a year? This is not really controversial. Any rational person, no equity investor in the company thinks this is a bad idea. They're like, obviously, no credit investor thinks this is a bad. Oh, you said that you would sell your assets to pay your obligation. I would. You pledged the assets to sell me the credit. Of course, you're going to sell them. It's like we have a fiduciary obligation to credit investors and to equity investors. And it's not abandoning Bitcoin principles. It's stating the obvious, which is you're better off to buy 20 Bitcoin and sell 1 Bitcoin than to raise no money, buy 0 Bitcoin, sell 0 Bitcoin. And so what we're doing is good for the Bitcoin community. It's good for the credit community. It's good for the equity community.
I think some of the pure Bitcoiners were pointing at the never sell phrase.
I don't think it's the purest Bitcoiners, the fundamentalists have been criticizing me for being unwilling to sell the Bitcoin. The fundamentalists take the position that Bitcoin is money and a medium of exchange and you're supposed to pay for things with it. So in fact, I would say the fundamentalist would take the position that, yeah, you should use it, as a medium of exchange. And this is a good thing. I would say that the Twitter trolls, it's really just very loud Twitter trolls who are in the business of gotcha saying, I see that once you tweeted never sell your Bitcoin, and I also see your company sold Bitcoin. This looks hypocritical. I'm going to make a big deal out of this and feign indignation. They're not Bitcoin fundamentalists. They're not Bitcoin maximalists. They're not equity investors. They're not credit investors. They're not even investors. They're really just Twitter trolls that are in the business of posting viral content. And what you see on X is stuff runs viral the more you feign indignation. And anyone that's followed me knows that for 5 years, we've never promised not to sell the Bitcoin. In fact, we've sold Bitcoin back 4 years ago. We sold Bitcoin. And we've said very clearly, of course, we'll sell the Bitcoin. So anyone that's a serious investor knows this is, for a year, we've been talking about this on conference calls. And so there's nothing surprising about this in the least. This is just a convenient opportunity for people to grandstand on social media and get their stuff to run viral with a headline.
Fong Li recently said as well that one of the priorities for strategy is to not only increase the net Bitcoin, but Bitcoin per share as well. In an ongoing bear market, what becomes the priority?
Our priority is to continue to accumulate Bitcoin and do it in a manner that's accretive to our shareholders over the long term. What happens, practically speaking, is in the bull market, it's very easy. We sold $21 billion of equity at a massive premium in about 16 weeks and bought Bitcoin. Very easy. So in a bull market, it's easy to sell credit, it's easy to sell equity, it's easy to do all of these things. In a bear market, it's a little bit harder. But for example, this year, we've been the biggest buyer of Bitcoin in the world, and we bought a lot of it, $10 billion of it or something. So in a bear market, you probably have to do it with credit and a little bit of equity, but more your credit focus. And the amount of credit you can sell will contract and expand, right? The business is naturally going to accelerate. And we're going to acquire more Bitcoin and generate more Bitcoin yield. Generally in bull markets, we'll acquire less Bitcoin, and we may or may not generate as much Bitcoin yield, but probably the growth rate of the company slows down in bear markets. I mean, that's okay. I mean, look, Warren Buffett's the most successful investor in that last century, in the 20th century, and maybe for 50 years. He's very famous for saying, I'll just sit around and do nothing for a year. If there's nothing to be done, then do nothing. He's like, you can stand at bat. His famous anecdote was, you can stand at bat and watch 100 pitches go by and not swing at any of them if they're all bad pitches. You don't have to do something. So we generally have acquired Bitcoin every quarter, and we're generating good Bitcoin yield. We're, like 12.5% or something BTC yield this year so far, even in a bear market, which exceeds our expectations. But we're not afraid to slow down if we need to slow down.
I guess just to wrap up as well, Trump signed the US Strategic Bitcoin Reserve last year, and there still hasn't been any accumulation despite the Bitcoin community really hoping for that. Do you think that the US need to start accumulating for the wider adoption from nation states?
I think it'll be a benefit to do so, but I don't think they need to do so. I think that I think that there's good advocacy for a Bitcoin reserve on Capitol Hill. I think that David Sachs and Patrick Witt have showed good leadership. And I think we see with Nicholas Begich, and Cynthia Lummis, they've also shown good leadership. And there are a number of bills and there are a number of initiatives that they're working on. I think they'll do something over time. The truth of the matter is the U.S. has won in the Bitcoin world. If you look at who are the companies that hold the most Bitcoin, United States companies, Strategy, Strive, right? They're all in the U.S. capital markets. If you look at who's creating the most Bitcoin securities, BlackRock is a U.S. company, Fidelity is a U.S. company, Grayscale is a U.S. company, Morgan Stanley is a U.S. company. If you look at the banks that are most Bitcoin friendly, the Charles Schwabs of the world, the Citis, the Morgan Stanleys of the world. And so I think the U.S. banking establishment, the money management establishment, the operating companies, and if you look at the investors and you said, well, who are the investors that are holding digital equity, digital capital, digital credit? It's mostly U.S.-based investors. So I think that the industry is centered in the United States. The investors are in the United States. The corporate actors are in the United States. The U.S. is going to benefit one way or the other. I'm very famous for going on record as, the U.S. ought to buy 5% of the network if they can and pay off the debt. But on the other hand, another thing that they can do is just be supportive of Bitcoin investors and Bitcoin corporations and Bitcoin exchanges and have supportive laws and supportive tax and accounting rules, which we do have. We have the most supportive set of regulators at the Fed, at Treasury, at the SEC, at the CFTC, in the White House. We have by far the most supportive set of regulators in the history of the Bitcoin network. There are a lot of good things that are happening for Bitcoin in the U.S. The United States will win either because its corporate citizens and individual citizens are the winners, or it'll win because it takes principal interest in Bitcoin. What happens and what happens is above my pay grade, but I'm not worked up over it. Everything is working according to plan. There's so much more exciting things going on. The real story here is digital credit is exploding, billions of dollars, $1 billion a month or more, and bank credit on Bitcoin is exploding. All these banks are coming online, and we're creating digital money, and those things are revolutionary to the entire capital markets and money markets and finance space and the credit markets. And what we'll see is trillions and trillions of dollars flow onto the Bitcoin network because of that. We don't really need any particular government or central bank to buy this asset. I think gold, for example, needs the support of central banks. I don't think Bitcoin does. I think Bitcoin is much more of a ground-up phenomena being driven by individual investors and corporations and being driven by technology, technical superiority, and economic superiority. And so I think organically it's just going to grow, and it'll grow without anybody's help because it is the best engineered monetary product.
Michael, thanks so much. I really appreciate your time. Thank you very much.